Hey, what's going on guys? And in today's video I'm going to be going over the LEGO investing and all that I found during my research. So I'll be covering the Brick Economies 100 index, the S&P 500 index, and then comparing and contrasting both in a sense. This video took me a long time to make, a couple days and such, with a lot of research and then editing it all together. Not to mention my mic literally broke mid-record, so sorry if this new mic just doesn't sound that great. Before the video begins, I'd also like to reiterate this is not financial advice. This is just like sort of my opinion and thoughts on comparing both the Brick Economy 100 index and the S&P 500 index. I think you should do your own research before making your own choices. And if you do happen to enjoy the video, please leave a like and subscribe, and let's get right into the video. So within the last 10 to 15 years, the LEGO market has become a highly profitable endeavor that some investors are either using as a side hustle or full-time investment. That being tracked by the Brick Economies 100 index. And according to their database, there's almost 20,000 sets listed, with the retail cost of those sets being $703,143 Canadian. The current value of these sets is $3,448,489. This displays an increase in the LEGO aftermarket of 390%. Like in the stock market, you can purchase a LEGO set at the prices it is listed. You can also do research on the top performing themes and their annual growth averages. For example, Overwatch being at 11.3%, or Bricklink sets being at 10.7%, or Teenage Mutant Ninja Turtle sets at 10.2%, all with increases of just over 10% yearly. The index fund specifically looks at the top 100 performing sets, as seen here, and it compares their growth, value, and sort of demand and all that, and based on factors like size, popularity, and collector demand. This way, the most influential sets are weighted to have the most influence on the index itself. And as for the S&P 500 index, this is a stock market index that tracks the top 500 companies in the US, similar to how the Bricklink 100 index tracks the top 100 performing sets at any given time. It includes approximately 80% of the total US market and has a market cap of $51 trillion as of December 11, 2024. Its highest market capitalizations comes from companies like Apple, Nvidia, Google, and Tesla, similar to how the top performing brands in the LEGO Index Fund were Overwatch, Bricklink, Teenage Mutant Ninja Turtles, etc. Okay, so to compare and contrast both of the S&P 500 and the Brick Economy 100 index, so to begin, the similarities, so both can be researched on both stocks and Legos to find the top performing and undervalued investments within like their subcategories. So both initial prices are determined with the initial public offering to consumers. So companies will explain to the public how much they think their company is worth, versus in LEGO, the LEGO group will say how much they think their set is worth. The values are determined by supply and demand, and both funds have a given track record of success within the last 60 years. As for the differences, the S&P 500 returns are doubled than those of the Brick Economy Index. LEGO also offers a tangible product that is physical and gives the ability for the person making the purchase to actually hold on to the box and like physically take care of it, whereas the stocks are sort of just like there until you realize the profit or the loss. The LEGO aftermarket is also just shaped by pricing and general demand with the retired set, whereas the stock market is just shaped by so many factors like buyers, sellers, news, financials, and so on. There's also very little risk in LEGO investing, as seen in the graph here. It's just been very steady at 5.82% like annually, and whereas the S&P 500 index is up 10.26%, so it has a bit of higher risk, but there's also larger swings, as you can see. As said previously, the S&P 500 since inception in 1957 up to 2023 is increased about 10.26% annually, whereas the Brick Economy 100 index is just increasing 5.82% since 1955. So here's how it would look if you were to compare both of these funds since the 1950s. So the example simulation I chose to do is if you took $10,000 in 1955 and you invested both of them, so here would be the results. So according to Brick Economy, with the 5.82% increase, your $10,000 investment after about 60 years would be $294,000. As for the S&P 500, with the 10.26% yearly increase according to Investopedia, that $10,000 investment would be just shy of $3.6 million. So as you can see, it's still a safe bet because they have a general track record of success, and it's just generally a safe bet as you're betting on 500 companies within the US. Same with the Lego market though. If you were to be following the 100 index, you're betting on the top 100 performing sets. So in this simulation, the S&P 500 would beat out the index fund of Lego since inception by like miles. It should be important to note that the Lego market is climbing quickly, and within the last 10 years or so, the purchasing of Lego sets has been ever so increasing, as seen according to Lego's revenue. That is up 869% since 2003, and their general sales are just coming up. I also think it's important to look at some outliers within the Brick Economy 100 Index Fund and the S&P 500 Fund. The Lego Castle set from 1978 and the Galaxy Explorer from 1979. So these sets have gained upwards of 10,000% as seen here in the last 40 or odd years. Now, does this mean that if you bought a set today for $43, as seen here, that it would go up to $4,000 and have a growth of 10,000%? Answer, probably not. However, research and statistics show that almost every set does gain value, whether it even be a small amount like a random Lego City set or the Galaxy Explorer set, as the demand is just generally increased when the set retires. And as for the S&P 500, an outlier could be Amazon, a company that started off as an online bookstore but has evolved into the #1 e-commerce powerhouse. Its IPO back in 1997 was just 9 cents USD and is now worth $224.12 as of recording this video, representing an increase of roughly 250,000%. Same with Lego. Does that mean that every penny stock trading between 1 cent and $1 today would climb to 230 within the next 30 years? Probably not. So just do your research and make your choices based on how you would make them and not what other people tell you to do. So what does all of this mean? So the takeaway from my research is that time in the market for both Lego investors and stock markets is key, and risk management contributes towards your success as an investor. The more you risk, the higher profits you have. The safer you play it, the more gradual money you'll make. Both funds, the Brick Economy 100 Index and the S&P 500 Index, and types of investing can have massive upside potential or downside potential, so it's important to know what you are doing before you begin your journey. However, as Warren Buffett says, time in the market beats timing the market. So I'd say start whenever and as soon as you can with whatever investing endeavor you feel comfortable in doing. And as a whole, whether it be Lego or the stock market, just do your future self a favor and start investing. I hope you all enjoyed the video and stay tuned for more to come. Thank you and have a great rest of your day.